Here's the brutal truth. 90% of traders lose money, yet most people think that they're going to be the exception. Let me ask you this question. Would you rather gamble like a trader or build wealth like an investor? Today, I'm going to break down the real difference between trading and investing, why most people fail at trading, and the two levels of investing that can completely change your financial future. And trust me, once you understand this, you'll never look at the markets the same again. So the first thing that we're going to talk about here are the 4 levels of understanding. And what are they? One is information stage, the implication stage, the implementation, and integration. So what does information is? So the information stage is knowing the facts and theories. The implication stage deals with understanding what those facts really mean. Like, what does it imply, right? The information that you are listening to or hearing or reading or whatever. The implementation deals with actually putting that into practice. Okay, how do I implement that? And then the integration phase talks about where it becomes a second nature part of who you are. You don't gotta go to read some book again. You just know what to do instinctively because it's become a part of who you are. So it's the 4 eyes of understanding. That's where you want to get to with anything in life. All right. So most people, and yes, even many financial advisors are stuck at level 1. They can quote textbooks, they know the market jargons, but when the real pressure comes, they break down. So I'm going to give you an example. But before I do, remember to like, share, subscribe, comment if you have any comments, and if you have any questions, feel free to ask below in the comments section. All right, hit the notification bell for notification whenever we release a new video. So one of my family members in another country actually has a top of the line financial advisor, like a high-end financial advisor, and this financial advisor advised this family member, extended family member, on selling their stocks during the dip because the market pulled back, and they said sell it and get out. All right. And they asked me, and I told them, no, I'm calm, don't sell. And they listened to me, and now the market is back up and now they're in profit. So they reached out and they were sort of praising me for like giving them that wonderful insight. And they just want to know, like, how do I know? Blah, blah, blah. No, it's just gaining understanding on the capital markets. So let's talk about trading versus investing and which one is better. Okay, so what's the difference between the two? Trading is like trying to win at the casino. It's a short-term, high risk, and majority of people lose money. Yes, a tiny percentage make it big, but most lose their shirts. It's very difficult to trade. Investing, on the other hand, is long-term. It's patient, it's buying and letting time compound on the heavy lifting. So let's be real. If you hold a strong position in the US capital markets long enough, history shows that odds are in your favor. That's not the hype. That's just the math. That's the statistics. So if you go back, you can see these things. So now let's talk about level 1 of investing is the Warren Buffett approach. You buy quality, you hold long term, and you let the compounding work for you. And that's how Warren Buffett became so wealthy, right? He holds on for 10, 20 years at a time. So he doesn't, all the volatility doesn't matter. Level 2, to go above that, is the mastery, right? This is harder but powerful, learning to identify the end of the bull markets and the beginning of the bear markets, right? The end of the bull markets and the beginning of the bear markets, right? So imagine being able to like protect your gains before a crash or re-enter at the right time. This level takes research, discipline, and experience, but it's worth aiming for. So you're basically you're holding on for years, right? It's not like trading, but you're going to get out at a specific point, and then you're going to try to get back in at the bottom of the bear market. So you're not timing it as like traders do daily, and you probably don't have the time to just sit there and trade. That's the other reason why some people don't like trading. Why is the other reason why trading is very inconvenient? Because you need to be watching the charts. You need to be like on that thing every day. And it's very difficult, very stressful, and also very difficult to win. Very difficult to be successful in trading. So why do that when you can sort of just set it and forget it? Obviously with some hedges and some stop loss to protect you and all those things. Nonetheless, when you are holding for years during the bull market, you're also thinking about the tax implications, because when you hold on more than a year or more, right, we can now talk about long-term capital gains. Rate in the US is 20% versus ordinary capital gains, which is higher. So we have to consider all of that in the decision making. So there's so many reasons why trading isn't as good as investing. But when you talk about investing and you break it into that two levels that I just mentioned, level one, the Warren Buffett's approach, level two, the approach where you are holding on throughout the bull market. Usually the bull markets last a few years, 2-3 years, and there's a bear market, a year, 18 months. So if you are able to identify these patterns, you can hold on for a while there's a lot of volatility. Okay, so that's why right now I know we're in a bull market currently. So I'm not stressing with the day-to-day news and day-to-day fluctuations and the pullbacks and so on, right? I'm worried about trying to figure out what are the indicators, what are the signs that we are near the end of the bull market. What are the signs that we are near bottom of the bear market? Why? Because that's where I want to buy cheap, right? Isn't the motto says buy low, sell high, right? So people like Warren Buffett don't even do that because they just holding for so long, right? They hold for so long. Eventually, yes, they do sell high after 10 years, yes. And they did buy low because they bought it 10 years ago. But I don't have that level of patience. I mean, it's good if you can hold on to stocks and assets that are less volatile for that long. I think it's fine. But more volatile assets, I think it's better to be able to get out on top of the bull market and get back in the bear market where you can buy for a cheaper price. And that's basically the way to build wealth. So I will create other episodes to show you how over a 7-year period, how one can accumulate wealth with a decent amount of starting capital. It doesn't have to be a crazy amount, but something that anyone can save and start with, and to be able to build generational wealth and continue to accumulate once you understand the patterns of the market. So once again, this is not financial advice. This is for educational purposes only. Make sure to do your own research with everything you hear. So to conclude this, here's the truth. Trading is flashy, but investing builds wealth. Don't just stop at information, strive for integration, where smart investing becomes second nature and you're unshaken by market noise. That's the goal of Empower Capital, helping you build the mindset and strategies of wealth. If you found this valuable, demolish and hit that like button. Obliterate that like button. Discombobulate that like button and subscribe. See you next time. Remember, we love you and God loves you. Stay blessed.